every time we think this pandemic can't get any worse, it finds a way to smack you in the face with a new set of dominoes that are starting to shake. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. We just saw our first energy company casualty because Whiting Petroleum recently declared bankruptcy. And that's just the first domino to fall. Now we're realizing that this pandemic is pushing countries around the world towards collapse, and the industries that we thought were recession-proof aren't as durable as we once thought they were. This is a new wave of dominoes that are starting to shake, and some have already begun to tumble, which is what I'm going to be talking about today. So make sure you watch this video until the end because I'm going to be talking about how you can capitalize on what's going on. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't show our video to anybody else. Subscribe to the Minority Mindset YouTube channel, that way you don't miss our new financial education videos every single week, and hit that little notification bell too, because if you don't, then YouTube doesn't let you know when the new videos are released. This economic crisis that we're facing wasn't caused by a virus. The virus was just the straw that broke the camel's back. We had huge businesses that were way over leveraged with no savings to protect them from an emergency, kind of like what we're seeing now, and greedy spending decisions all coupled together. This virus was just the needle that popped the balloon that they were inflating. And then to create sort of a perfect storm, when our economy started suffering, Russia and Saudi Arabia started an oil price war, which took our economic crisis from bad to worse. Here's a quick recap of what happened. Russia and Saudi Arabia are some of the biggest oil producers in the world, and they were getting very worried because this pandemic was forcing countries into lockdowns, which meant these countries didn't have any need for oil, which meant countries would stop buying oil from Russia and Saudi Arabia. It got to the point where China was literally turning away oil tankers because they already had so much oil sitting there and they didn't need any more. Now, as a little bit of economics, if you have a huge supply of something with no demand, the price of this thing will usually come down. Likewise, if you have a huge demand for something like toilet paper and there's no supply of it, then the price of this thing will usually go up. If you're subscribed to our free Minority Mindset newsletter, you already know the story. Russia and Saudi Arabia decided to have a friendly meeting to talk about cutting the production of oil, that way oil prices wouldn't sink. At some point during this meeting, Russia got triggered. Russia got angry and they stormed off, and they said that they were not going to cut the production of oil. They were actually going to ramp up the production of oil to increase the supply of oil to make the price of oil come down even more. That's when Saudi Arabia said, "Oh no you don't," and they started ramping up their production of oil too. And so now the whole world was left with this massive supply of oil with very little demand, which made the price of oil crash. At its peak, oil was selling for a fraction of what it cost to produce that oil. Really quickly, if you do want to stay up to date on what's happening in the finance and business world, this way you can make the smartest decisions with your money, you can join our free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. This way you can be smart with your money. This newsletter is completely free, and you can subscribe to our newsletter by clicking the link up here or by clicking the link in the description below. This oil price crash is great for people like you and me because we get to fill up our gas tanks for very cheap, even though we have nowhere to go and everything is shut down. But this isn't good news for energy companies. You don't need to be a business genius to understand that if you're paying $10 to create a product and then you're going out and you're selling this product for $5, you're not going to be in business very long. So this oil price war is literally digging the graves for American energy companies. American oil and energy companies had been struggling for years. So this oil price war was kind of like a clean uppercut to the entire industry. North Dakota's Whiting Petroleum is a prime example. They had been losing money like a lot of energy companies for a long time, and in order to stay afloat, they started borrowing a whole bunch of money. That way they had the cash to pay their employees. And then they started selling more stock or equity in their company, that way they could raise more cash, and now they finally ran out of ways to raise more money. To give you an idea of what I mean, in 2014, their stock was trading for over $370 a share. Now in 2020, their stock was trading for under 30 cents a share. That's when the banks knocked on their door and they said, okay, your loan is due, you gotta start paying up. And they were left with no option but to declare bankruptcy. This was just the first domino to fall in the oil and energy industry, and there's a very good chance that this is going to trigger and help more dominoes fall over the next 12 to 18 months. The longer oil prices stay low, the more energy companies that are going to fail. This is bad for the employees that work at these companies because they just lost a job. It's bad for the suppliers who sell products to these companies because they just lost a buyer. It's bad for the investors because the investors just lost their investment. And believe it or not, it's bad for alternative energy companies too. When you're pushing for alternative energy, the last thing you want are low oil prices because people don't care about wind or solar or alternative energies like that when oil and gas is so cheap. So if you are investing in the energy space, make sure the companies you're investing in have a lot of cash on hand to survive a long downturn, because I don't know how long this is going to last. I mean, President Donald Trump is trying to get involved and make the oil prices go up, but I can't predict the future. The second domino that's starting to shake is the global economy. Me and my team have been covering pretty extensively what's happening in the United States with our YouTube channel and our newsletter. Right now, businesses are literally on life support because they have no customers spending money and giving them life, and instead, the government is pumping as much money as they can into these businesses to try to help them stay afloat. There's a cost to printing all this money, and I've already talked about that on our YouTube channel, so I'm not going to talk about it again, but if you haven't subscribed to our YouTube channel, you should do that. But even with that cost of printing money, we're very fortunate because, well, the United States dollar is known as the world's currency, and even as we print more money, there's still a lot of faith in the United States dollar. Other countries around the world don't have that same luxury. I was reading a report about what's going on in countries in Africa where they don't have the same resources to support businesses and people during a lockdown, and it's really sad. It's similar to what I've seen in India, where you have people that work literally morning to night to make a few dollars in cash, and then on their way home, they pick up some groceries, and these groceries are what their family eats for the day because they don't have fridges or ways to store food. So if you don't work, you don't get paid, and you don't get to eat. Less developed countries don't have the same resources to keep their country, their businesses, and their people afloat through a pandemic or lockdown like this. They're trying to get help from the International Monetary Fund, or IMF, which is kind of like the Federal Reserve for the world. But the reality is, the longer this lockdown and pandemic lasts, the more likely it becomes for entire countries and economies to collapse. Now, you might be thinking, wow, well, that sucks. At least it's their problem, not mine. Well, for one, if that's what you think, you sound like a jerk. And for two, it actually kind of is your problem. We live in a global economy. Everything you buy isn't produced in America, and everything that American companies produced aren't consumed in America. Not to mention the problem of printing all this money, which will trickle down to affect America as well. So if countries around the world do start to fail, they won't be able to buy products that American companies work hard to produce. And American companies might not be able to get the material, labor, or products that they need from other countries. Again, you don't need to be a business genius to understand that if you have a product that people aren't buying, or if you have a product that you can't create, you won't be able to stay in business very long. This domino hasn't fallen yet, but countries around the world are hurting bad. And if this problem cannot be contained or fixed, this will cause a cascading effect which will affect other countries around the world, including the United States. And the third domino that many people didn't realize was shaking is that businesses that we thought were recession-proof aren't pandemic-proof. We used to be able to say things like, oh, that local restaurant is recession-proof because no matter how bad the economy gets, people will always need an affordable place to eat. But we never asked if these recession-proof businesses are pandemic-proof. With states on lockdown that keep getting extended, recession-proof businesses are meeting their match. We are seeing a new wave of recession-proof businesses. So daycares, barbers, restaurants, and the wedding industry get completely slammed, and these businesses are forced to shut down with no idea of when or if they will be able to open back up. You might have heard about the Payroll Protection Program to help small businesses stay in business. Essentially what this program says is that if you are a small business, you can take out a loan that you don't have to pay back as long as you use this money to help keep your employees employed. So if you take out this money and you keep your employees on payroll and you don't fire them, you don't have to pay this money back. This was supposed to be the small business savior. but this plan has so far fallen on its face. The government said again and again and again that this program will be ready to go live by April 3rd, no questions asked. And so if your business shut down in March, well, at least you'll be able to cover April and maybe May's payroll, no problem. Oh, and the government also promised that you will be able to get approved for this loan the very same day. That way you don't have to worry about liquidity issues or paying your employees from April 3rd onwards. I'm an entrepreneur and an attorney, so I work with a lot of small business owners, and many small businesses wanted to take part in this program, so they did whatever they could to continue making payments and making payroll through the end of March until April 3rd, and then April 3rd came and things didn't work. The government gave no guidance and very unclear instructions on how this program would work. I mean, they kept changing the terms of this loan. It felt like every day until April 3rd, and then April 3rd came and banks had no clue on how to handle this program. I mean, almost every bank responded like Chase Bank did, because Chase Bank put out a statement saying, yeah, I know the government said that we'd have this program out and running by April 3rd, but there's no way that we're going to have this running by April 3rd. Then slowly, some banks were able to kind of figure it out, but there was no such thing as same-day approval. Oh, not to mention the fact that the amount of money allocated for small businesses was nowhere near enough. And so chances are many small businesses are going to be forced to let their employees go now because they don't have the resources to pay their employees, even though that's what they were promised, unless something changes. So we have a problem, the economy. And we try to come up with solutions for these problems, but these solutions keep falling on their face. And the longer and longer this pandemic keeps getting drawn out, the bigger the problems get. I don't know how long this is gonna last, but what I do know is I want you to come out of this a financial winner. You have to remember that this pandemic will pass. We just don't know how long or how bad it's gonna get. The average bear market or downward stock market lasts somewhere between 12 and 18 months. This pandemic really started hurting the US stock market in February or March of 2020. It's possible that by summertime this virus completely goes away and then the economy and the stock market will start thriving once again, kind of like a yo-yo effect, because we've never seen the stock market and the economy fall this fast, and so there's a chance it could grow and come back just as fast. But it's also possible that if our country, our economy, and our health aren't handled properly, we could be on the verge of entering a very long and very painful recession or even a depression. Look, I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. You might even lose money, so don't just blindly listen to a random guy on YouTube. What this means for me is I want to slowly be buying companies that are strong and have a lot of cash on their balance sheet, because we don't know how long this downturn is going to last. So I want to make sure that this company has the cash on hand to survive this downturn without relying on the government. And I want to do this slowly in phases because I want to have ammo in my back pocket for whatever opportunities might come my way. That means I don't invest all my money at once. I gradually buy as things come down. Again, you need to always do your own due diligence and make your investing decisions based on what's best for your finances. But this is why it's so important for you to stay on top of what's happening in the finance and business news. That way you can make the smartest decisions with your money. And I have the link for the free newsletter to help you with that in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about how you can find a strong company to invest in on the stock market, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.